Hello, my name is Miles Pitcher. I'm the owner of Superior Lending. I appreciate you watching this video. I'm excited to introduce you to one of the most innovative loan products I've ever found. I've been in this business for 21 years, and this is one of my top favorite loans available. So imagine this. If there was a loan product out there that I could show you that would shave half of the time off of your 30-year mortgage, maybe even more, even down to where you have this paid off to 4 to 5 years. And I can save you not only thousands in interest paid, maybe even potentially hundreds of thousands of interest paid depending on your scenario. Would you be interested in learning about it? It also helps you maintain liquidity and flexibility. What that means is the equity in your home remains accessible to you for the next 30 years without having to refinance. This is the results page from my all-in-one simulator on my website. What it really does is it allows you to compare the all-in-one versus your traditional mortgage. And this helps you really look at the numbers to see, is it worth it? So this is an actual client that I quoted out a couple of weeks ago. If they followed the all-in-one, they would have their loan paid off in 3.5 years and save almost $80,000 of interest. And you can see that they are even leaving a current 30-year loan that has 28 years left on it with a rate of 2.625. Then here's another client that's looking at doing a purchase. This was $1 million home. They'd have 20% down payment. The 30-year mortgage would be current rate 6.5%. Doing the all-in-one, they would have this paid off in 11.8 years, still having access to the equity in the home, but it would save them $579,000 of interest versus the 30-year mortgage. Now, let me make sure you understand that who this loan product is right for or who needs to learn about it. This loan product has tight underwriting guidelines. Only the best of the best clients really can get this loan. You have to have at least a 700, maybe even over a 720 FICO score. You need to have reserves in place. You need to be, and this is the most important part, is you need to be a person who is a saver, a budgeter, or in short, you're cash flow positive. If you're someone who maxes out credit cards, just breaking even, this is not a good product for you. You really should just stick with your 30-year mortgage. But if you're a saver or there's times where you get large chunks of money coming in, you definitely need to learn about this product. The basics of the all-in-one loan are this, is that it is a first position HELOC that is paired or tied with a normal checking account. Except in between those two accounts is a sweep feature. And this is super powerful. And this is one of the things that helps our clients save so much money in interest and get their mortgages paid off early. Now, you may have heard strategies about using HELOCs and how to accelerate your payoff. You need to check out this video because this product has some really great features that I believe make it far superior to the other strategies that you've possibly heard of. I just want to leave you with a few questions to think about as you get ready to watch that video. Number one, comparing a traditional mortgage against this new product that's called an all-in-one loan. Think about this. Why don't you take your rainy day funds, your reserves, what you have, and dump that into your 30-year mortgage and pay it down? Second question, what is more important, the interest rate that you have on that 30-year mortgage or how much mortgage interest you'll pay over the life of the loan? Third question, on a 30-year mortgage, how long does it take if you make minimum payments to pay down half of your balance? We'll talk about those in the next video. I appreciate you watching this video. Check out the full-length video to find out how we can help you save thousands in interest and get your loan paid off faster, earlier, and give you access to the equity in your home for up to 30 years.